in this panel, we do want to look at regulatory alignment and deference. It came up already a lot. With me on this panel, which I'm absolutely delighted, is Shen Bing, who is Director General of the Department of International Affairs at the China Securities Regulatory Commission. Hannah Cassidy, who is a partner and co-chair of the Global Banks Sector Group within Herbert Smith Freehills. Arnaud, who is Executive Director, Head of Regulatory Affairs for JP Morgan in the APAC region. And last and certainly not least, Almoro Rubin de Cervin, who hopefully didn't hear my comment to Sean earlier, who's Head of International Affairs in DG FISMA and leading on the work at the moment in the discussions on the MOU, but in general work on all the international issues. How he manages to do that in one day, I don't know, kind of in one working day with all the things that are going on. But I think with that, I might start with you, Bing. Just where do you, why are we talking about this whole issue about deference? So what is the importance, I would say, of international cooperation for you?
Thank you, Nick. I think the key issue is that we are living in a world that financial activities are global, actually. So when we encounter cross-border financial activities, there's always issue that how we deal with regulations and laws of different jurisdictions and how we lower the transaction cost for all the market participants. So as today's capital markets, securities markets especially, is highly regulated on one hand, and on the other hand, it's very global. So as the topics of previous sessions, touched upon, so there's always a question of how we deal with these kind of issues. As Ashley mentioned, that sometimes we need some kind of a governance structure or tools to tackle this problem. So to this end, I think international cooperation, either bilateral or multilateral, is especially important.
Thank you. Maybe, Almoro, the same to you. I know we've already started talking about intended or unintended extraterritorial effects of regulation coming from different regions. I'm not pointing the finger on any specific region, but where do you see kind of the necessities and challenges to international cooperation?
Good morning, Nick, and good morning to being to the other colleagues in the panel and to the audience, or good afternoon actually for those who are in Asia. I didn't hear your comments to Sean, so you'll have to write it to me after. Actually, I wanted to say in the start one thing which is very similar to what Bing was saying, that we regulate at home and at the same time finance is global, and so we need to find ways of handling that. And partly we do it through international cooperation, we have international standards, and also we need to have tools to manage the cross-border interaction. We do it through equivalence because that's also the way our legal system is based. Others do it in other ways. So actually the difficulty is how to ensure that the different systems being used are actually working together. But I think it is really important that we all keep in mind that we have our own systems, our own jurisdictions, and we don't have a global supervisor, we don't have a global resolution authorities, we don't have a global safety net. So that's the fact that we'll have multiple jurisdictions. It's a feature which will remain. And I think that's actually something that the Asian market participants know very well. In the Europe, we're trying a very significant experiment in integrating what were 27 sort of different legal systems into a single one. So we have a single rule book, a single supervisors, and single resolution authorities in the euro area, as Sean was mentioning. So in that context, I think it is of paramount importance that also we explain and we discuss. I was struck by the intervention by Ashley. He was actually very good in explaining also why are we doing things and what we're doing. And I think that's also the result of the fact that we are discussing and we have a forum to discuss in a structured way. And I think it's also important that beyond the discussion between authorities, there is also space like we have today for an open engagement with industry to explain the type of discussion we're having. Thank you.
Thank you. Maybe I can pass over to our industry participants who are facing this on a day-to-day basis. Hanna, I mean, from your perspective, you know, the benchmark regulation has been mentioned already a few times this morning or afternoon, given you in Asia. But you've seen other examples of fragmentation introduced by regulation. Maybe you can elaborate a little bit on that and what that means for some of your clients.
Sure, thank you. And good morning and good afternoon, everybody. Well, I think it's pretty simple. I think without deference and regulatory alignment, we'd end up with multiple jurisdictions developing completely inconsistent regulatory standards. Regulators would develop different tools for supervising firms, and in short, operating cross-border would be a logistical and operational nightmare for firms, and markets wouldn't function efficiently. So instead, what deference does, it allows the market connectivity to develop, it supports financial stability, and it allows firms to conduct business cross-border smoothly. Without the clarity and the certainty that deference brings, firms, I think, would be quite hesitant about expending time and energy setting up operations cross-border. There's a huge economic benefit to deference.
Thank you. And maybe finally, Arnaud, a question came in from Matthew Shen of FISMA to Ashley at the time, and I throw this back at you, which is, you know, you're working among other things also on the sustainable finance agenda. How do you see that evolving? What is kind of the prospect of cooperation, but also the implication of possible fragmentation around all the good efforts being made across the world on sustainable finance?
Yeah, no, good afternoon, good morning, and thanks for having me today. I think you're right, sustainable finance, and I was hearing very attentively to what Ashley was saying. It's relatively a new type of regulation, and we think there's a great opportunity to actually create an approach that would work globally. And I think, as Ashley mentioned, there's a lot of work on the prudential side with the central bank at the NGFS, and also at the security level with the IPSF. But the challenge we have today is that there are too many taxonomies. I mean, I was discussing with some colleagues last week, and the person was surprised that I wasn't talking too much about carbon, because I was talking about the financial inclusivity, which is an issue in China and Japan. I was talking about the pollution. I was talking about the environment. So the challenge is, it is a very broad, very wide topic. And when you look at the size of Asia, it's, again, a very diverse region, right? Some countries are very developed, very mature, maybe like Japan, and others are still in development. And in the middle, you've got like future giants like China and India. So what would that mean for the industry if we were to do nothing? Well, first, you would get higher transaction costs. Then potentially you would get exclusion of transaction activities. And then, as Ashley mentioned, there is a risk of greenwashing. So the good news is there is lots of leadership, especially, and I'm glad to have our colleagues from Europe and China today on this panel. There are like global taxonomies coming from Europe and from China. Very high level in Europe, there is a focus on the environment and carbon. In China, the focus is on the pollution. What is very interesting is obviously that these two jurisdictions have agreed to work on a common ground taxonomy. So there is progress. And as Ashley just mentioned earlier, hopefully we will get some alignment between Asia and Europe by the end of the year. But I think when you look at what happens recently, and I mean, working for a US bank, I was worried about what that would mean for me and the taxonomy being based in Asia. I was pleased to hear the announcement from the French and American government 2 days ago to have an alignment between the US and Europe. So hopefully by the end of the year, we could have a global taxonomy. But that said, it's going to be a very difficult objective to achieve because time is of the essence. And again, if you look at coming back to the fragmentation, the original issue, where we see three main issues or impact, you've got the end user impact, essentially where you get higher costs and potentially even market access challenges. Then you get market development issues where if you get fragmentation of small liquidity pools, you can even disintegrate the market essentially. And ultimately that can lead to what we call financial stability. And this is really what we want to prevent. And I'll finish quickly on the drivers of this fragmentation. And again, there's a lot of reports. I mean, Ashley, I think, mentioned the IOSCO report in June last year on deference. There's also the FISMA, actually, from Matt on the taxonomy and the green finance with lack of global standards. Clearly a big issue. We've seen that, and that's an issue for the IBOR transition. Extraterritoriality, we've seen it in derivatives in the past, especially in this part of the world in Asia. And I remember no LEI, no trade. When MiFID came to Asia, that was really a big challenge for many of us. Then you get the localization, that's for data and prudential. And finally, you get the inconsistent implementation of the rules. So these are really the problems we're trying to target. And you're right, taxonomy and sustainable finance is maybe an area where we can actually work together.
Thanks, Arnaud. And I like kind of the way you set out some of the challenges and the different sets of challenges that are driving fragmentation. And maybe what I would like to do over the next kind of 40, 50 minutes is to look at two aspects in particular. One is the role of international standard setting bodies and supervisory, day-to-day supervisory cooperation. And then secondly, look at the process and governance around deference. So how do we make it work? And also how do we keep it alive? Because it's not a once-off event. With that in mind, maybe Bing, I can pass over to you first, because I think Arnaud made a really good point about IOSCO's work on deference, some other international initiatives in helping bring supervisors together. And when we spoke before, you talked about the importance of international standards. I would like you to elaborate on that a little bit. What role do the international standard setting bodies play in driving cooperation, supervisory cooperation?
Yeah, thank you, Nick. And there's obviously an important role for the global standard setting body to play in the deference world. As earlier discussed by our colleagues about the something that is still in a developing stage, like the sustainable finance and benchmark reform and etc. It is actually the there's a lack of standards yet set by international bodies. So that is an issue mentioned by a colleague I fully agree with. But if you look at the history, actually IOSCO have done, for example, together with CPFMI of the BIS, standards for the financial market infrastructure, which I actually personally participated for 2 years. I do think that standard is very helpful, because all the major economies, including European authorities, American authorities, Asian authorities, all participate in this process, and there's a strong, common kind of commonly driven, needs to establish that standards. After that, I think, many issues like how a CCP should be run, and how what are the minimum kind of standards need to be maintained are clarified to the global markets, so that in that sense, when two markets connect with each other, if you know that the other markets follow the same standard, actually comply largely the standards of the IOSCO CPFMI, for example, it will give a lot of relief for the other regulator, and to have a kind of a strong trust in the so-called qualified CCPs. Of course, that also even in these areas, there's also challenges brought by the financial crisis when the OTC actually is different jurisdictions according to the standards introduced again, different approaches domestically. So it's a kind of a journey. I think it's kind of a journey that needs that all parties work always together to tackle of these, deference issues. That how we could, but I think at least the international standards could, form a kind of solid foundation for different jurisdictions to start with, and to deal with these, cross-border issues and avoid fragmentation. So I do believe that all the international standard setting bodies and also even the FSB and G20 should play a more important role in putting together guidance. Of course, it depends on the whether it's matured yet to have established standards like the PFMI. But these discussions, I always feel is healthy and helpful for moving this process forward. Thank you.
Thank you, Bing, and thank you for your contribution to the CPMI standards. As you say, they were very essential in the derivative markets. Maybe one follow-up question to you. I like the way you described the concept of it being a journey. But if you had the choice, where should that journey start? Should it be top-down? Should, as Ashley just raised this dynamic tension, should we wait? Should regions wait for international work to progress, as we had with the G20 after the last financial crisis? A top-down approach? Or, many regions want to move forward on different issues, and then the standards have to, afterwards, the international standards have to be fitted on top of the different regional approaches. How should that process work? Because that's where a lot of tension lies between international standards and regional initiatives.
It's a very good question. I think it's sometimes a top-down approach may not be so efficient. Because establishing a standards needs time, but the market develop very fast. The situations changes very fast. So I don't think a single kind of top-down approach would work for the very fast changing financial markets. I do think that the different parties should work together and that sometimes that it's more kind of helpful to actually start from the actual situation. If the market, like today, market from different parts of the world, suggest some way forward, and I think in this regard, several major kind of regions. Like today, for this forum, the Asian region and European region could work together, for example, for some issues of common interest, and that would also deal with some of the specific issues between these two regions. So that's kind of my take. Sometimes you just cannot wait to solve the realistic questions.
Thank you, Bing, and I will come back to that in a moment, because I think the EU-China investment agreement could be an interesting basis for regional cooperation that then could become a catalyst for global standards or global cooperation. But before I come back to that point, Almoro, maybe the same question to you, because from an industry perspective, we often say to you, well, acceptance of international standards should be a good basis for equivalence decisions. And then you say, well, we need to do a bit more than just the international standards. But what relevance do you assign to international standards or norms or principles in determining equivalence with a particular jurisdiction?
Thanks, Nick. International standards are fundamental, and they are actually the sort of common language, and they are the reference on which we build our own work. But standards alone are not sufficient. You need enforcement, you need supervision. And hence you have supervisory cooperation, and that between supervisors, they look at home hosts, they cooperate in colleges, and they use the standards because that's a common language. And it's obviously more developed for banks because also in response to the crisis and the experience, in the market sphere is slightly less developed, and in the insurance even less developed. But I think that's also testimony to the type of crisis that we faced. So we're using obviously the standards also for our equivalence, and we're also making a reference to the standards for our international cooperation, but standards per se are not sufficient and don't exhaust. And actually, one of the most tricky part is when standards are not developed yet. And so, which goes to the question that you were asking before on top-down, bottom-up. And in an ideal world, we would be all together sitting around the table, all relevant jurisdiction, actually, or even all jurisdiction around the world, and this is a problem, we address it. But as you very well know, this is an ideal world which doesn't exist in the reality. And so, for instance, in green finance, we were faced with a situation where actually the G20 was refusing to engage because one of the two or three of the main partners were refusing to discuss. And so we had to go on our own. We had to go on our own both domestically. And so we started to do a lot of work. And actually what the SIG report that actually shows is not the result of a week of work. It's a result of years of efforts. And so because it takes time and there are always journeys. So it's a journey of journeys. And now we see finally that we have to do it at international level. And then we found an excellent way of cooperating, but we had to set up an entire new structure with International Platform on Sustainable Finance, precisely because the standard setting bodies and the G20 were refusing to work on green finance issues, and in particular on taxonomy. And actually, to Arnaud, a point I want to make, and I think it's going to be extremely challenging. Taxonomy is a very difficult piece of regulation. We are putting this in place in the US, a lot of discussions, but there are some international partners who haven't even started discussing about the merits of having a taxonomy. So the idea came from, and we'll see actually, and I'll be transparent because I refer to the US administration, which now comes with ambition in green finance. We need to see exactly ambitions in which area. And I don't think that actually, I would be surprised that they come with such an ambition that they are ready to work not only on a taxonomy, but in order to have an international standard on a taxonomy by the end of the year would be very surprising. So what we can do is to advance, make all the progress that we can with those that are willing, and that actually hopefully will bring everybody to the table. But going back to what Ashley was saying, for instance, the IFRS, despite having set up the IFRS and having the standards applied in many jurisdictions around the world, again, the US are not really implementing it domestically. So it's slightly more complicated, but I think that's also where there is one of the challenges. That's why we have a journey, because despite all the goodwill, we live in an imperfect world where the considerations, the domestic considerations often, and the way the politics influence each jurisdiction actually have a significant impact on both the development standards and the implementation. Thank you.
Thank you. Maybe also to you, Almoro, just a follow-up question, because you raised it, and I come to Hannah after you, which is on supervisory cooperation and enforcement. Whenever you determine equivalence for a jurisdiction, the way I look at it is you also look at the supervisory framework. In many cases, you require an MOU between the supervisors as a precondition for equivalence. or as you say, the establishment of colleges. That's quite a tricky process to go through, because you're in a way kind of having to some extent judgments about the supervisory capabilities of that jurisdiction and not just the signing of a paper called an MOU. So how do you look at supervisory cooperation, and how do you look at facilitating supervisory cooperation in the run-up to taking equivalence decisions, or once such equivalence is in place and that cooperation is ongoing?
Nick, I mean, equivalence deference implies that you defer and you trust the other party. And it trusts not only that they have the rules in place, but the rules are actually implemented and supervised. And so when you take an equivalence decision, or when you defer to another jurisdiction, you trust that the way they are implementing and supervising is the right one. But you want to be sure how this is going. Hence, we have indeed MOUs between the national supervisors, the third country, and the EDAs. And we are going to do increasing monitoring. Because to some extent, the equivalence framework, the more than 300 decisions that we've taken, it's relatively young. It's in the last 5 to 10 years. And so I think now that we have a set of decisions which are in place, and the MOU have been in place, now we're also looking how this is working, and etc. And I think that's a very healthy way of actually working and showing that the equivalent decision is the basis not only for the business model of the market participants, but also for enhances cooperation between supervisors.
Hannah, you kind of see on a day-to-day basis how companies have to deal with supervisory cooperation and day-to-day enforcement, kind of the nitty-gritties of, reporting and other compliance obligations. How does that, what has been your experience there, and how has deference and equivalence facilitated such cooperation? Or to what extent, frankly speaking, is that equivalence or deference in place, but on the ground we do see kind of different supervisory practices and requirements, creating some sand in the system?
Sure. So, look, I think there are huge benefits to deference, but I think there is a big limitation, and that relates to just the patchwork of regulation that exists. Securities market regulation is just one part of a patchwork of complex regulation, and the challenge that I often see my clients face is in relation to data privacy laws. Create challenges both for the regulators who are seeking to supervise entities, but also for the firms that are being supervised. And where this really comes up is in the context of cross-border data transfers. And I think no matter how aligned the securities market regulators are, through that international cooperation mechanisms, there are limitations in terms of how harmonized they can be when it comes to data privacy regimes. There are obviously other regulators, other bodies who are developing those regimes. Now, I think the MOUs and the supervisory and the enforcement arrangements that are in place do help to smooth over that lack of consistency, that fragmentation. From a practical perspective, if you've got a regulator in one jurisdiction seeking data that's held in another jurisdiction, but in relation to activities into a third jurisdiction, you can quite quickly see a couple of data privacy frameworks coming into play. What is challenging is where regulators are asking for information on a voluntary basis. And I think without that sort of statutory backing for the request of that information for that data, firms find it really, really difficult to kind of maintain that regulatory relationship on the one hand, but also make sure that they don't fall foul of their local domestic data privacy obligations. Now, one way to cut through this is obviously for the local regulators to themselves issue their own statutory requests for the information, with a view to then sharing it with the that original regulator who is investigating the issues. So those there are ways to cut through it, but it takes time. And for firms that are dealing with this for the first time, it can take quite a lot of time and education and thought and thinking just to nut through all of those issues.
And maybe Arnaud had raised that issue, but I ask you first, Hannah. Then data localization requirements come in as well, of course. How do you see that? Because I would say there's been a trend towards more data onshoring across the world, but in particular also in the Asian region.
Yeah, I think it's a really big challenge for regulators and for firms. Obviously, we've seen in Hong Kong, the SFC tackle it through the introduction of their own circular around electronic data storage. The regulators' primary objective will to make sure that they continue to be able to supervise, i.e. access the data that relates to the relevant firm's business activities and operations. To the extent that data is held offshore, that obviously impacts and frustrates the regulator's ability to supervise that entity. So I can see why in some jurisdictions there is that sort of movement to data localization, but it completely cuts across the economies of scale, the reduced cost, the increased security, etc. that storing data in different locations bring. So I think, again, going back to the supervisory and the enforcement mechanisms that are in place, they do enable, in the long run, firms to comply with supervisory requests when it comes to data, but it's not straightforward.
Thank you. And then finally, maybe on this point, I know you made the point that we in Europe often refer to Asia as a more harmonious economic bloc than it is in reality, of course. What has been your experience in, supervisory practices day to day in making deference reality, or to some extent hindering it in day-to-day operations?
No, thanks. Actually, I wanted to go back to Hannah's points on the complexity here in Asia. So I'll give you an example. As a US bank, whenever we transact OTC derivatives in Singapore, if we have, let's say, an Australian counterpart and we book the transaction in Europe, we may need to report the same transactions up to 5 times under the CFTC rules. That's the first one. Because we have a Singapore trader, we're going to have to comply with MAS rules. Then we're going to have to comply with the Australian rules because we may have marketer on the ground. And then because we book as well in Europe, we may need to report under European rules. So the same transactions will need to be reported up to 4 times to 4 different places. It is complex. It is costly. We can do it. We are lucky because this is only reporting. But imagine any other requirements that may be tricky. So that was the first thing I wanted to highlight. Now, coming back to the solutions and what we have seen, yes, the coordination between authorities is critical. And I think you mentioned it, the memorandum of understanding. I mean, we see new ones almost every week, which is good news. There's also the FSB peer review. I was reading last week the FSB peer review on Indonesia. And what you get is a neutral perspective from global regulators on the third country regime. And it's quite interesting as well because you can learn a lot. Supervisory colleges as well are a good way for the regulators and supervisors to engage with one of these global banks. But coming back to potential solutions and what we think could work is a greater participation in global standards, or what I would call the regulatory inclusivity. I mean, it's great to have someone like Bing representing Asia. At times, especially in global fora, it's important to have the smaller markets, the developing countries, there at the table so that they can explain and share their challenges. In the space of sustainable finance, the transition, for example, is critical. Otherwise, you run the risk that some industries, some sectors may be completely out of scope. So that's one, the greater participation. Substituted compliance, I think obviously we've discussed that, it's critical. I think Almoro mentioned that sometimes you don't have standards, and I think in that case, you would need to do an assessment of the third country, and that should ideally be based in a transparent manner and on an outcome-based criteria. And the final one, I think it's been discussed already, that's a supervision cooperation, ideally on ex-ante agreement aligned with global standards. But I'd like to come back, Nick, if you don't mind, to Bing's comments on the journey, because similar to you, I was struck by the idea. I think the journey should not stop. It's an ongoing journey. If you think about it, most of the time you've got the global standards, and that's great, and the likes of Bing and Almoro would contribute to it. But what you get sometimes is the inconsistent implementation. And that's why it's important to review, to do market survey. And actually something I really like in the European jurisdiction process is the fact that every 3 years, from what I understand, you need to do a review of the regulation and check whether it was fit for purpose. And that's the reason why, coming back to the European benchmark, we knew that that would come, because at some point the Commission would need to issue a report to the Parliament. And I think it's a very healthy process to review.
Thank you very much. It's not automatically every 3 years. We write different reviews into it, and we lobbyists are partly to blame to kind of keep our jobs going. But I agree that there's a benefit to it. Maybe also one quick follow-up question to you, which is because a number of questions have come in, and I think they're very interesting, because these questions relate not so much to standards set by international standard setters, but to technical standards. So, for example, in the US, in changing the settlement cycle from T+2 to T+1, which has significant implications, of course, for global markets. And another question is around operational resilience. In Europe, we call it DORA. But, different standards being set at the operational technical level around, in this case, cybersecurity. So what role do these, let's say, more technical standards and changes to technical standards play from your perspective for JP Morgan in an international cooperative environment?
Okay, so a lot of questions here. I think from a technology perspective, when you talk about the T+2, T+1, we think that this is something we should aspire to, but something that will take time. That said, when you are in Asia, and again, sometimes it's not just the regulations, but it's a fact of where we are located. So if you look at the reporting, again, I'll come back to as an example, under the US rules for derivatives, you've got 20 minutes to report. Because most of the activity takes place in the US and you've got all the technology around it. But when you are in Asia, especially if you are trading out of Hong Kong and Singapore, these are small local markets. They are essentially hubs where the rest of the region comes in. And many participants are actually on the other side of the planet. So you execute a transaction early in the morning, but you may get the allocation the following day. And that's why you may only need and receive and report the transaction on T+2. So 20 minutes in the US, T+2 in Hong Kong, Singapore. So the technical requirements are very useful. But again, I would go back to my original point. It's important to get local flavor, to get the local regulators participating, because there are some challenges locally. Now, to finish on your point on the operational resilience, I think it really depends on where you are. If you are in the US, you would observe what happens at the global level and maybe look at the UK leadership and see whether this is something that you would want to maybe integrate in the US operations. But it really depends as well on your setup. We are a bank with more than 40 branches globally. Therefore, whatever happens in the US will have an impact on the ground. But if you were to look at other banks having local subs, they may have a slightly different impact. So from that perspective, when I look at operational resilience, I look at any potential market fragmentation impact, anything that could disrupt our activity. And then you're right, you've got all the fintech, data sharing, cybersecurity, cloud that could step in.
Thank you. Now, coming to the last point, which is kind of the predictability, continuity, governance, and kind of ongoing management of equivalence and deference, which I think is a very, very important point and was raised by many of you already. Maybe, Hannah, I start with you because IOSCO's put forward this deference paper, which is a very interesting way of looking at this. But how do you think this could be managed or should be managed? Because rightly, from a European perspective, we don't want equivalence for just now. It's part of the issue why we don't get quick equivalence decisions with the UK right now. But it's a commitment for a longer period down the line, hopefully never to be withdrawn. So how does one manage that process on an ongoing basis?
Sure. So I think it's really important to think about equivalence as kind of, thinking about the lifetime of an equivalence decision. And you've got at the beginning, the actual decision-making process. And I think the more transparency and clarity that you can have around how a jurisdiction or how an equivalence decision is reached, I think the better for the industry. Again, I think the BMR is a really good example where obviously equivalence is one of the 3 routes to registration for third country benchmark administrators. And some of the feedback over the last couple of years is that there could be more transparency around what exactly is the criteria that the Commission looks at when determining equivalence. So I think that is really, really key, and I'd probably call it sort of equivalence around equivalence. Now, many jurisdictions have published guidance documents that set out the decision-making process. They also, those documents contain other tools that are available either instead of or in addition to equivalence, and the UK Treasury is a good example there. As well as equivalence, they have tools such as mutual recognition agreements that can be used either instead of or alongside equivalence. So I think that kind of the initial transparency around that decision-making process, I think, is really, really key. The second point is around the fact that equivalence it's a job for life. So I think we've heard a couple of the panelists talk about the role of monitoring. So just because you get equivalence doesn't mean that it necessarily won't fall away in the future. Obviously, if your standards or your supervisory approach diverges to such an extent, then it may deem that initial equivalence decision no longer valid. Now, obviously, with the sort of the breadth and the speed of new regulation, particularly when it's being introduced to tackle new technology, new threats to investor protection, such as crypto, digital assets, etc., it's a huge challenge for regulators to actively monitor how the different jurisdictions and the different regimes are changing and developing. Some of the MOUs that we've talked about before have notification sections, mechanisms in place such that if either one of the parties, their standards change significantly, then there is a proactive obligation on that party to notify the other side. And then I think finally as well, towards the end of the life cycle, I think it's really important to have transparency and certainty around any withdrawal of equivalence. Obviously, that's kind of worst case scenario, and you'd want to avoid a cliff edge scenario. So there needs to be clarity around exit. What are the processes? What would the level of dialogue and consultation that would take place before any exit would happen? It's really important that any exit is done in an orderly way and sufficient notice is given to minimize disruption. So just a few thoughts on the governance around equivalence itself.
Thank you. And maybe I could pass over to Bing, because we're very excited. I know it's still being, the text being finalized and it then needs to be ratified and so on. But literally, we got kind of a Brexit deal at Christmas, and we got an EU-China investment agreement for New Year. Hopefully that doesn't become a pattern in the Commission, because it interrupts our holidays a bit. But it was a big achievement. And I think I'd like to hear a little bit more what your expectations are being from that agreement for the discussions that we're having at the moment, for this cooperation and dialogue, and also regulatory cooperation going forward.
Oh, thank you, Nick. I think you mentioned very correctly. Also, from our perspective, it's also a very important achievement between China and European countries. And on one hand, it will actually definitely increase the cross-border investment and trade activities. On the other hand, connecting to the topic we talk today, actually this treaty or this agreement actually specifically talked about regulatory cooperation, like in terms it includes the discipline requiring transparency of regulation, and also it's also specifically mentioned about compliance with international standards, like standards set by FSB, like to the IOSCO and etc. So I think it is an incorporated element that actually embedded an idea that actually regulatory cooperation is an essential part to make the agreement workable. So that's I think that's there's a strong linkage of this. So I think it's a two sides of a coin. When there's an agreement, there will be definitely more investment, trade activities, cross-border activities. Then there's need more cooperations, regulatory, supervisory, enforcement cooperation between the two sides. And deference, of course, is an important tools both sides need to employ. In the past, as we developed the London Connect, as you know, that to listing the CDRs and GDRs of these the listed companies of the London market and the Shanghai market. Actually, we are the beneficiary of the deference arrangement in Europe, because before that, actually the both sides spent years to already establish the equivalence in the accounting standards, and also the auditing regulatory kind of arrangement is also in place. So that is very, as I was involved heavily in this project, that actually gave a lot of kind of facilitation of this kind of connectivity project. I think in the future, given that there's already such a mutual recognition and equivalence arrangement, this connect with London may be very easily to be extended to other European markets. It will make life much easier when we going to cooperate with other markets in mainland Europe. So that is one point I'd like to mention. You talk about expectation. Of course, I think that agreement would be very encouraging for the industries of the both sides. As you also know, that China's capital market also opened up very quickly in the recent years. It will also open up for both investment side, like investors, they can invest into the China's capital market, either equity market, bond market, etc. And also for the European financial service providers. And now there's for the securities market, for example, there's no kind of equity cap limitation any longer. So that would give a lot of chances for the prosperity of both sides. Thank you.
Thank you very much, Bing. And yes, I think we talked also before about the importance of regional cooperation as a stepping stone to international cooperation in certain areas. And I think the work Ashley pointed out, which I think goes back further to the European Investment Bank working with the Chinese Development Bank around taxonomies and comparing taxonomies and approaches, has been very, very encouraging. And indeed, actually the divergences, yes, they exist around certain issues, but are much smaller than people had anticipated. we know what those two sectors are, but we don't need to kind of point them out. But it's really a very small segment, which is very, very encouraging. Almoro, you've been very quiet, so I will give you not just the last word, but I think in the sense of, the whole question around predictability, continuity, management around equivalence, has been a big concern. There's been questions about how political is the process, some of the preconditions that have to be set that go beyond regulation into taxation, market access, anti-money laundering, data. It's not an easy process to get equivalence. But how do you see the deference paper influencing or reflecting the Commission's thinking in managing equivalence now that it's in place, now that you start the review of the over 200 and something equivalence decisions that you have? And how do the ESAs feed into this? Because, of course, they now play a role since the beginning of last year in helping you with that monitoring process.
Well, thanks, Nick. I'm not sure I was quiet or not, but I mean, you're setting the amount of space we have, because as a virtual moderator, actually, you have more power than even in a lively panel, in a live conference. Indeed. So on equivalence, I think I want to make a couple of points also to react to what Hannah was saying. I mean, equivalence normally is a culmination of a convergence process around international standards and also around sort of deference and cooperation between supervisors. And the idea of equivalence is to have it in place in a rather stable way to help the business model of the market participants. So it is actually something that should enhance certainty. And so withdrawals, which are extremely rare or when a decision expires, are a sign that a problem is emerging. And so why problems emerge? Problems emerge because normally there are divergences taking place, or because there are supervisory issues, or because there are other issues coming in, might be AML problems popping up, rule of law issues, sanctions popping in, for a variety of reasons. And so these context aspects obviously bear an impact on the deference context. But I mean, they never come really as something which is sudden or surprising. And so the idea that you need to put in place a detailed process on specific equivalence, I think it's a bit disingenuous. And I note actually that the UK itself, in its own paper on equivalence, actually said that if for financial stability reasons, you might have to withdraw equivalence on a short notice, because it's a risk management tool as well. So it's something that you have to do. It's an imperfect tool. It normally helps business. It encourages convergence. But at the same time, when dealing with a financial system which is volatile, possibly creating risk, at the same time, you need to have tools also to manage those risks. And I wanted to make maybe a final point, because I think time is over, and then we should leave the space to Stephen that he deserves. But I want to make a point to Arnaud, who was complaining that he has to report to 4 different supervisors. But I mean, the example he was making is of a US banks operating through a branch in Europe for a trade between Singapore and Australia. That's actually, if you have to do the full reporting, because all the supervisors need to know what happened. But actually, that shows that market fragmentation is not there at all. And so instead, I think you should use the example to show the benefits of actually international cooperation, deference, and cooperation by supervisory authorities. Thank you.
No, thank you very much indeed, Almoro. I think I would have normally asked you one follow-up question, but I won't, for 2 reasons. A, as you say, I don't want to cut too much into Stephen Mayor's time, but also I think Arnaud answered that question very elegantly, and that is really the importance of the EU-Asia Financial Services Forum, the forum that took place yesterday, and why we're having this conference today. Normally we would have it on the same day if we were in Asia. But I think Arnaud made the point really well, which is to bring a lot of the supervisors of the smaller markets in Asia to the table as well. I don't know whether you want to say one last word on the forum and its relation to some of the structured dialogues you have with Japan, might have with China, and you have with Singapore and some of the other jurisdictions.
Oh, indeed, that's a very good point. I mean, it's easy for the large jurisdiction to have bilateral dialogues. In international standard setting FSB, the number of participants is inevitably limited. And so I think it's very important that you have both regional groups like the Asia Pacific, the IOSCO Asia Pacific Regional Committee, or that you have the FSB regional group where there is a dissemination of what is happening in the standard setting bodies in reaching out to all local regulators, supervisors. But I think it's also useful that we do region to region discussions. And I think one of the strengths of our system is that Stephen, that will speak just after me, he speaks for himself, but he has a board where we have all the national competent authorities as well. So there is an element of dissemination and reaching also to the local. And I think that level of cooperation, which is obviously very strong in the European context, I think it's extremely important also in an Asian context. And I think also extremely important that it happens on a bilateral region. We're doing actually the same, and we're copying the model that we have with the Asians, also with Latin America, for instance. And I hope one day we'll do it also for Africa, because I'm sure there is a future for that. So, Nick, you have plenty of future activities for you. Thank you.
Interesting. We will talk separately on Africa because you've read my mind. But I think for now, let's focus on Asia. Thanks and highlighting the importance of the forum again. We really very much support it and hope it will go from strength to strength. With that, I would very much like to thank this panel. I wish we could kind of all clap hands because I thought it was a very good panel. Thank you very much to Bing, to Hannah, to Arnaud, and to Almoro for this very, very interesting discussion.